Hey, good morning, everybody. Welcome to the Ankerstar Wealth Morning Update. Actually done in the morning for the first time in a while. That's all on me. And as you can tell, I'm not sitting in my home office like I said I was going to be yesterday. We're off to Spokane. Alexa, my youngest, her last national qualifier, the last time I'm traveling out of state for volleyball at this level. Anyway, so excited about that. But I'm also excited because this is the last trading day of Q1. And, you know, we measure in years and then we measure in quarters and months and all of that stuff in the financial world. You got to draw the line somewhere. So with the three topics I'm going to talk to you about today, the first one is me talking about how the market did in the first quarter. You're probably sitting there with a big thumbs up, unless all you owned was Apple, which Apple's down 10% in the first quarter. And of course, that's our number one holding. So that's been a drag, but we'll get more into specifics on what else was not a drag. Basically everything else going higher. So that's what I'll talk about first. Hand it off to Mike. He's going to talk about Home Depot's acquisition of a distribution firm called SRS. I was not familiar, but it's an example of a vertical integration, and he's going to give some more examples on what that is and when it's worked and when it hasn't. I'm looking forward to hearing that. And lastly, don't fast forward to this, but I know you're anxious to get to it in this presentation, but let's look at that third bracket, how it closed out yesterday. Who's still alive with 100%? I hope I am, but we'll learn about that more here in a minute. Before we get started, remember this is a financial education presentation, so you have to do your own due diligence before acting upon anything you hear in this presentation. Go to our website at ankerstarwealth.com if you want more disclaimer information. With that, let's talk about Q1. It's not closed yet, and anything can happen, right? March Madness tells you play through the whistle. Tennessee, South Carolina, if you saw that clip, women's basketball, play through the whistle, right? They choked out and lost after 3.7 seconds left. But anyhow, so play through the whistle. So this is a slightly premature closeout of the quarter because there's hours left. But right now you can see that the S&P trades flat on the day. Probably not going to change going into a big weekend like we have. But it's the best quarter in basically 5 years, right? So 10% is what we're looking at right now. We're talking S&P terms. Not everything was up. Obviously, we talked about Apple was down. Talked about, Bitcoin is up significantly. But for the most part, you have the Magnificent Seven that has carried the market for a long time, and kind of everything else kind of catching up in one fell swoop in the first quarter. Now, the market doesn't know what a year is or a quarter or a month. That is how we measure things. So there's a lot of people that say, well, hey, Steve, isn't 10% a normal annual type of return? And I'd say absolutely it is. I say 10 to 12, right? If you go head more towards technology, right, you can outperform that in up years significantly and down years, yeah. But it all does work out. But what I will say is, some folks would say, well, if my goal is 10% a year, why don't I go to cash and sit out the rest of the 9 months? And I'm like, well, the market just doesn't know what day or time or where you are on the chain, right? So you always have to look forward. And we have a couple things to help you with that. First of all, we have a commentary coming out from Joel. If you don't read those, he does a written piece, which is very thoughtful, that lays out some very exact arguments for the next quarter as well as the rest of the year. And he's a real estate expert, so he also has a real estate piece, which we don't probably talk about enough. That will be published on Monday. We'll wait for the quarter to physically end and then publish that on April 1st. You'll see that on the website as well as an email out to clients. And then, of course, we have our investment advisory board quarterly wrap up that Mike will lead next Wednesday. That's going to get into the specifics of our top 10, where the book is at, what performed great, what didn't, and how we're adjusting going forward. So a lot more information to come. All right, that is all I have for today. I'm going to stop sharing my screen. Mike, over to you to talk about Home Depot and vertical integration.
Yes. Home Depot has made a major acquisition of SRS distribution. And so what I thought I would do is just take a quick look at vertical integration. And for those of us that have been in the manufacturing world in the past, there used to be a tendency, if somebody is supplying something, auto parts, whatever, software, why not acquire them and then save costs? That is a common concept, and it can work good and bad. So what I thought I would do is show Home Depot. So let me pull this up and share my screen. And you can see this is an $18 billion bet, biggest one in Home Depot's history. And what they're doing is they're trying to, get into the contracting side, get into the supplies for this. And this can work great if the economy, continues to do well. They continue to do good business. It can save cost. Guess what? You don't necessarily need 2 CEOs. You don't need 2 CIOs. You can reduce administrative costs at the highest level. This can also go down in flames, but I'm not saying Home Depot will. But what I want to do, and I'm going to show, here's what's happening with Home Depot stock today. No major change there. It's pretty much flat. It's a $380 billion company making an $18 billion acquisition. So, it's not a major thing for them. But I wanted to show an example of, here are some good vertical integrations. And Apple, as who Steve mentioned, good example of one that has a lot of vertical integration: manufacturing, distribution, software development. They run a very tight ecosystem, allows them to control quality, top to bottom, very good. Another one that you hear a lot about is Netflix. And you hear about, they develop movies and shows, and then they, release those and show those through Netflix. Sometimes they even release them in the movie theater, then they bring them to Netflix, but they run that content from beginning to end. It's not on the screen, but Disney would be another good example of that. So these are ones that have worked successfully, at least in the past. But you might say, does it always work? If it always works, then we should always do it. It does not always work. Here are some examples of what we'll call merger failures. So for example, Amazon kind of getting into Whole Foods hasn't went well. They have not really hit into that grocery space, taking all of the Amazon's technology. Another one, if any of you remember WordPerfect,
Yeah.
but obviously we all know what Microsoft Word is. And if you're under the age of 40, you probably never heard of WordPerfect. But Microsoft Word used to have a competitor, WordPerfect, didn't go as well. And then a really, really bad one. Once again, if you have an AOL email address, maybe you remember this, but Time Warner and AOL, this one did not go well. And there's a list of some other ones. So anyways, vertical integrations, very interesting. And there's a great article that's out on Investopedia talking about, vertical integrations, why you would do this, why you would not do this, and how it works. But basically, it's taking the supply chain and moving it backward or forward. Another place that I see this, and I was looking up possible investing ideas, and I looked up C4, which is a energy drink, and I thought, wow, it'd be great to get into C4. Maybe it'll take off like Monster did, right? Well, I looked up,
Right.
and C4 has to distribute their product, but they already have a majority stake taken by Dr. Pepper. So Keurig Dr. Pepper. Dr. Pepper Keurig owns the distribution channel, so they're able to take that energy drink and use their distribution channel to make money off of it. If C4 was trying to do that by themselves, it would be very difficult to get in all those places. So these are just some of the things that we look for when we're looking at companies and looking at possible investments. With that, let's get over to the next bracket update. So here we go. Here we go in the Elon Musk division. And this was yesterday, and this was the first time the market was up. So let's see how the market did up. In number one seed, NVIDIA crushed, down 2.5% against Total Energies up 1%. That is an official beatdown. So the number 16.
Saw that coming.
Yeah. And unfortunately let me glance, a couple people had NVIDIA. Irene, I'm really sorry. NVIDIA, buy the chip. Don't buy it yesterday, though. And somebody else had NVIDIA. Jim, NVIDIA went down. Nobody had Total Energy. So that dark horse will continue forward.
Right.
Chevron knocks off. Yeah. Chevron knocks off Pepsi. Nobody had either one of those. Procter and Gamble beats Cisco. No problem there. Tesla, thank goodness they advanced in the Elon Musk division. They are a 4 seed. Several people had Tesla. We saw Jaden get off the offer, so he had Tesla. Russ continues a perfect bracket with Tesla. Trisha, perfect bracket with Tesla. So,
All right.
good day for Tesla. Next, look at Wells Fargo versus Home Depot. Wells Fargo ekes out a victory, 1.64% versus 1.57%. Yours truly had Wells Fargo. Good job, Wells Fargo. Home Depot, I'm very sorry, David. Home Depot goes down. Intel, Steve keeps the perfect bracket with the number 14 seed Intel, jumping up, biggest gainer of the day, 4%. Wow, Steve, how'd you know it was going to go up 4% on the day that we did the brackets? I have no idea. But anyways, did well, looking like they might match up against AMD in a future round, who advanced, and then Facebook. So this bracket did pretty well. The number 1 seed goes down, and then for later today, that's happening right now, and I have not looked at these. We got Google in action, Salesforce, Johnson & Johnson, JP Morgan Chase, Verizon, Amazon, all in play today. So we'll see what happens as the quarter comes to a trading end, and we'll give you an update tomorrow. With that, I will tell you that looking at our standings, Steve Ankerstar, wow, continues to have a perfect bracket. He is counting on Baba winning today. Trisha continues to have a perfect bracket. She is counting on Salesforce today. Russ, perfect bracket, counting on J&J today. And Pat, counting on Amazon today. So we have 3 people that still have perfect brackets, all with different picks today. So we'll see what happens for tomorrow and if anyone continues on perfectly. That's all I have. Thank you.
All right. I don't know who they're playing, but Baba's up 1.21% today. So go Alibaba again, Chinese tech firm. All right. I want to share one last thing as we close. It kind of makes me sick, so I'm going to try not to be too upset. But I will say that honestly, in this world, you get what you deserve. And the breaking news up top, SBF, who defrauded billions out of people, sentenced to 25 years for massive crypto fraud. When I say you get what you deserve, he did not get what he deserved. In my opinion, of course, one person only. That is a ridiculously light sentence. So us as a group of humans for only sentencing him to 25 years when he's out on good behavior after 18, so he can go back and do this 2, 3, 4 times again, makes me sick. So we need to stand up and be up in arms about when people go into this industry where it's very easy to defraud people, to not even really penalize them for it. It's BS. So anyhow, sorry to be Debbie Downer there as we close, but anyhow, that was breaking news. So good luck to your brackets for the remainder of today. Again, tomorrow is a non-trading day, but we're going to be back with the show with a couple of topics. I might even talk about SPF again because I'm so mad about it. We shall see. But we will close out at least the first round of the Ankerstar Wealth Stock Madness to see who's leading going into the second round next week. So with that, you guys have a good one, and we'll see you back tomorrow. Bye.